The biggest mistake I see people make when they fall into financial hardship, like losing a job after they've purchased a home, is not communicating. Unfortunately, there are times in life where really difficult things happen. And one of the hardest things that you can face as a homeowner is a loss of a job that makes it difficult or maybe even impossible for you to make your house payment and keep your mortgage current and up to date. Now, while this is obviously not ideal and it's very difficult for most people, it isn't necessarily a doomsday scenario. Although if you react in the wrong way, it certainly can be. It can be a challenge if you don't communicate with your lender. So the number one thing that I tell anybody who has had a financial hardship like this is you must keep the lines of communication open. The first step to do after you've lost that job is to evaluate your budget. Do you have any kind of income still coming in? Were you able to replace your job maybe with just fewer wages? How does that affect your lifestyle? How does that affect the money that you're spending? Are you going to be able to afford this house in the near future? You're just struggling to do so now. All of these are questions that you should have answered for yourself and then have a conversation with your loan servicer. Now, a loan servicer is the person in charge of accepting your payments and managing your balance as you make payments on your home. They're the primary contact that you have through the mortgage ownership life cycle. And while we help you get that mortgage, we're not a loan servicer, so you please call me if you have a financial hardship like this. But my coaching with you is going to be talking to you about how to communicate this to your loan servicer. Now, loan servicers, if you've ever called one, the customer service isn't necessarily the easiest, quickest thing in the world. That's just fact. That's true with anything we do in life. Getting customer service sometimes can be difficult. So you need to be patient and you need to understand that the person on the other end of that line doesn't get to make decisions about your mortgage. They're there to collect that information and be a gatekeeper. So you want to call your loan servicer, you want to talk to them calmly, hopefully with a plan on how you're going to work through this. You want to have a stopgap in place, like a backup job, a temporary job while you're looking to get back to the income level that you are currently at. If you lose your job, does it mean, are there any immediate mortgage repercussions? Well, you can't unqualify for a mortgage, right? So once you have that mortgage and you've signed the documents, you own the house and the mortgage is in place, there's no one who can take that mortgage away from you unless you default on the terms of that mortgage. So if you find another way to make those payments, like gift from a spouse or a family member or whatever immediate emergency means you have to take, there's no repercussions you'll have with your loan servicer. They cannot take your mortgage away from you while you continue to make timely payments. But let's say you lose your job, you don't have anybody who can help you as a benevolent gifter, so now you know you're not going to be able to make your next mortgage payment. It's important to call your loan servicer, explain the terms of your situation. Hey, I lost my job, I don't have this income, I'm looking for other jobs, but I haven't found one yet. What options are there for me? How do we move this relationship forward with as little pain as possible? And it's not a fun conversation to have. They're probably going to ask you for information. They're going to ask you to look at your debts and to see what kind of income you do have, if maybe you have a spouse who's working, and they're going to come up with some kind of a plan. Most of the time, they will work with you to try to find some type of reduced payment plan or sometimes paused payment plan that gets added to the end of the loan. But the key is that you begin that conversation before you're ever 30 days late with the first payment. Like, pick up the phone when you know it's coming and have the conversation with them to try to help figure it out. So, can they undo your mortgage qualification? No, you still have that mortgage. Are you required to make the mortgage? Yes, you are required to make the mortgage. If you can't make the mortgage and you have a conversation with them, are they required to give you a lower mortgage payment to keep you in that house? You'd have to talk to an attorney about that, but no, they're probably not required to do that, but it's in their best interest for you to keep that mortgage timely and on track. So you want to have a conversation with them. You want to know what your budget is, how much money you do have coming in, how much you have going out in bills, and where you stand on all those things when you have that first conversation, so that you can get to a win-win scenario. What if it's a worst case situation and you hear the term foreclosure? So foreclosure is the act of the creditor, the mortgage company, calling your note due because you haven't lived up to your side by making the payments. And when they exercise the provisions in that note, it allows them to take ownership of your home and eventually evict you from that home. So you want to obviously avoid that at all costs. There are other ways that you can get out of that situation with as little damage as possible. There's something called a deed in lieu of foreclosure, which is basically you giving the deed back to them and not stretching out the amount of time that you're in your house. There is also the possibility of a short sale, where if you don't have any equity in that house, you might be able to sell that house for less than what's owed on it and get out of it that way. So there are some options, but for you to really know what your options are, the best thing to do is have a conversation with a mortgage professional about it, and then have the conversation with your loan servicer to see exactly what your options are. Is it doomsday from day one? Not necessarily. If you can find a way to make the payments, that's great. If not, you need to contact your creditor before you're late and let them know your hardship. See if you can work out a situation, negotiate some way moving forward to try to keep making some payments at least, so that you get to stay in the house. And then if it comes down to foreclosure, if you can't afford that house, how you go about exiting that house with as little pain as possible. All of that is predicated on having open lines of communication with your loan servicer. If you or a family member or a friend find yourself in this position, I would strongly recommend that you encourage them, or you yourself call Weber Mortgage, and we will talk through all these repercussions with you. We can advise you to some degree. We can hook you up with other experts like attorneys and such that can also advise you, and hopefully you can navigate these choppy waters with as little damage as possible.